This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Friday morning, we're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And steady state for the market. Things are looking good. Of course, it's strong cues from across the globe as well. So we have our hands full.
Well, that's right. Let's see whether or not we can take out higher levels. It's a Friday, and later this evening we have the crucial jobs report that comes in from the United States. So some volatility could pick up.
I think it should be a little greenish at least, right? I mean, yesterday it was, and the market yesterday did not respond in a full vigor because the cues were good. The market came off the highs of about 22,700 and sort of ended in a middling kind of a way. So let's just sort of rewind the clock back to the overnight session and tell you what you need to know. It's follow through. It's good kind of follow through. Typically, sometimes what happens is that you essentially have the FOMC day markets responding a certain way and then they're flipping on the other side in the next session. But that's not what we've had this time around. We've got decent, nice follow through. So global risk-on sentiment seems to be back. I think that's point number one. Overnight, equities rallied about 1.5%. That's Nasdaq for you. And as I said, both the US yields and dollar continued their slump. So the 10-year lost 5 basis points. The dollar index was down about 0.4%. We're at about 105.3. So, I mean, imagine the 10-year was looking like it could get all the way up to 4.8, 4.9. Some were talking about 5. We are down to what, 4.5 or something in that range now. And the dollar index from being above 106.2 or 106.2, we are down quite substantially, right? I mean, 105.3. So this is good. You had data which came through and it showed that weekly jobless claims are low in a stable kind of a fashion. And that does support higher for longer kind of a policy stance from the Fed. But I think at the margin, what the relief here is that, because data has been so strong all through this year, some were saying that maybe the Fed, instead of forget cutting, forget holding, they perhaps may think about hiking at some point. They may open that door, and that did not happen. So I think there's a near zero chance of a hike. And I think that's the relief that we've been seeing over the last 2 days or so. Talking about data, we of course have the big data, which is the jobs report, as we were talking about, monthly number. And I think we'll kind of see what that does. Oil is the other one. I mean, again, here, no follow through. We would have liked follow through after the 5% sell off, some more, but nothing there. We're holding at about 83.64 or so. As I said, and I think yesterday was a decent day because you got a flattish start. And then, a flat start with positive cues gives you the opportunity to get in. You need to essentially break above the swing high of 22,783 on the way up. We left off at 22,650 yesterday. So that swing high needs to be taken out, and then we kind of sort of talk about higher levels. That's the new high as well. And of course, on the downside, we should not break below 22,400, 385 to be precise. But on the way down, I mean, that's now kind of sacrosanct. On the Nifty Bank, the support comes in at the 40 hourly, which is 48,900. We left off at 49,200, so not very far away. And on the way up, a break above 49,974 will indicate that we're kind of sort of ready for 50 and then beyond that as well. It's not a bad kind of setup to walk into this morning in any case. The GIFT Nifty will come up on your screen. And I think, well, there you go, 100 plus points on the GIFT Nifty. The only thing is, a flat start gives you, it kind of leaves the door open for all kinds of possibilities. But 100 point, I mean, then you've got to be really committed if you want to buy 100 points higher. So let's see if we get that kind of a gap up. But as I said, the setup is positive. Sonia.
Oh, absolutely. And the bulls live to fight another day, right? I mean, a very strong cues coming in from across the globe as well. I think that'll be the main point of the market today. The fact that we begin the day with handsome cues from across the globe. The Nifty, though, is holding firm at that 22,650 mark, so no problems at all over there. In fact, if you map the last 1 or 2 months, right, the Nifty is now up 3% from the lows that we saw in the month of April. So it's climbed quite a bit of ground. It's also seen higher tops and higher bottoms, if you look at the chart, right, in the last many days, which indicates that this is a market that's willing to go higher and willing to climb every wall of worry. Very strong global cues overnight, no problems at all. The Dow is up 300 points. Apple actually ended more than 6% higher after reporting its Q2 numbers and announcing its largest ever $110 billion share buyback. So that was the big announcement globally, and that's what took a lot of these tech shares, including Apple, higher overnight. Now, in our own markets, of course, Bajaj Finance will definitely be in focus after the RBI lifted restrictions on some of its businesses with immediate effect. And that is something that, removes a big overhang of Bajaj Finance, and that stock will definitely be on the upside today. We had some good earnings, good quality earnings from a lot of stocks in the broader markets, whether it's Ajanta Pharma, KEI Industries, JBM Auto, strong numbers coming in across the board. And in terms of earnings today, you have Britannia, Titan, Adani Green that will be reporting their numbers. If you're looking at flows, right, I mean, the flows have been coming in thick and fast from the domestic fraternity. So yesterday, once again, 1350 crores of money came in to the markets from the DIIs, in the cash markets that is. And in the month of April, if you look at it, on an average, the last few months has seen about 20, 30, 40,000 in terms of flows. In April, we saw almost 45,000 worth of money coming in, 45,000 crores that is, worth of money coming into the cash market. So this is definitely a market that's driven largely and solely by the domestic institutions. And I don't think things are going to be any different. The GIFT Nifty, though, suggesting a very, very strong start.
Well, that's right, Sonia. And given the fact that we're likely to start off with a 110-point uptake, we'll need to build on to those gains. So let's run you through the top points for today's trading session. The GIFT Nifty, well, that's indicating a strong start. The bulls will want to build on to those gains. But the Nifty Bank, they're facing resistance at high levels, and that's been the case for the last couple of sessions. Now, I'll tell you what, the bulls will be missing those FI shots in the system, because when you have a net short market, you have reason to see a short covering bounce. So as of now, this market is devoid of any kind of short positions, which is a bit of an issue, and that's hurting, I think so. Later this evening, the US jobs report, well, that'll be the crucial trigger to track with regard to the global markets. But let's get to the FI positioning first in index futures. What did they do yesterday? Yet again, they added more longs than shorts, which takes them to a net long position now of close to around 53% odd. And from being net short at the start of the series, well, they've quickly moved to a net long position. And now if you just pull up that chart, you'll see from being short of close to around 50,000 contracts, 90,000 contracts. Well, from being short, now in fact, just take a look at the graph. We have moved to being net long by close to around 25,000 contracts odd. So you're missing those shorts in the system. But that doesn't really tell you the picture. Look at the FI gross long positions. Well, that was at the start of the series, it was around 95,000 contracts. In a matter of a week, we have doubled those positions. So the FI gross long position has seen a big addition. And I'll tell you what, you'll want some shorts to get into the system to help us with that additional fill-up. What about the options data? 22,700 call, 22,700 put. Well, very active in yesterday's trading session. It appears there's a short straddle that's playing out here. What is that? You write both these two strikes, you pocket the premium. And the premium is roughly around 350 rupees on an average. So the broad range you're looking at is 350 minus 22,700, 350 plus 22,700. And that's why that's the broad range that you're looking at. Resistance is at around 22,750. Last couple of sessions, we have gone to this level of around 22,700. But we can't conquer that. For starters, we'll be opening above that level. The Nifty Bank, well, it's in a broad range. It appears that there is some resistance at these levels, while support comes in at around this 48,500 odd. The stock that I'm tracking today is going to be Coforge. Their numbers were quite weak, that they delivered. The revenue growth lower than expected. The margins as well missed estimates. And they've gone ahead and they bought a majority stake in Signity Tech. And I was reading a couple of notes, notably Nuvama as well as Jefferies, and they believe there's a case for derating of the stock. When you trade at such high multiples, you miss on the results and you do an acquisition that may not be very favorable. The stock could get clunked back, though in the last couple of sessions, it's pulled back a little bit. So I'll keep an eye out on this one. On the upside, obviously, Signity is the one that will react positively because they'll get a new owner.
Okay, thanks a lot for that. So plenty of stocks to talk about. Without wasting any time, let's get straight to it. On the equity side, first up, we have Rhythm Desai of Morgan Stanley, who says in temporal terms, this bull market is aging, but it's still young in terms of returns, especially because he sees some distance for the earnings cycle to go, driven by some surprising changes underway in India. Therefore, he adds, this is set to be India's longest and best bull market ever, so stay invested. They are overweight on financials, technology, consumer discretionary and industrials, and underweight other sectors. That said, Rhythm adds the macro trade could peak in the coming weeks.
All right, some money market views now. This is V. Lakshmanan of Federal Bank, who says dollar index and US 10-year yields traded at elevated levels during the week as FOMC kept rates unchanged, maintaining the narrative of higher for longer. The yen is strengthened after touching the 116 mark to the dollar. The rupee was range-bound during the week, and he expects it to trade in the range of between 83.2 to 83.52 for the next few trading sessions.
And on the bonds, Lakshmanan says the Indian government bond yields traded marginally lower, tracking the move in US Treasuries after the Federal Reserve maintained interest rates as expected, but downplayed the possibility of rate hikes. Crude oil prices fell sharply after US commercial crude inventories marked their largest weekly rise since February. For the coming sessions, he expects the Indian 10-year benchmark bond yield to trade in a range of 7.12 to 7.22%.
Well, we've got a lot of stock-specific action, and so we'll get to that list on the top 10 segment that we'll be tracking in greater detail in a short while from now. For the time being, running through the list: Bajaj Finance, Ignity Tech, Ajanta Pharma, JBM Auto, KEI Industries. All of them will be reacting to positive news flow. While on the flip side, we have 5 in the green and likely to see 5 in the red: Railtel, Coal India, Coforge, Yes Bank, and Ciat.
All right, well, lots of stocks to track, and we'll get to that bit in just a bit. Richard.